Heya Cryptozens, it's 10 p.m. Pacific time. My name is Nikodemus, and welcome back to the Crypto Overnighter, where we take a nightly look at the crypto, NFT, and metaverse space. And keep in mind, nothing in this show should ever be considered financial advice. It's 10 p.m. on January 10th, 2023. How did your Tuesday treat you? Hopefully better than Mark Cuban, because a bunch of former Voyager customers are going after him. So what's going on is those customers are saying that he falsely advertised the company and that it was a Ponzi scheme. The case will be heard in a U.S. District Court in South Florida, and Cuban is set to testify next month. Now, the judge in the case denied Cuban's request to have his testimony in the Voyager lawsuit split over 2 hearings. He will have to give his full testimony on February 2nd, all in one go. 2 employees from Dallas Mavericks and 3 plaintiffs will also testify. Now, Cuban has made some statements that made Voyager's investors angry. He did say that the vendor was low risk, and the lawsuit says that Voyager advertised itself as the official crypto broker, but it was not registered with the SEC or the CFTC or any other regulating bodies overseeing the selling of securities. And here I was thinking the spat between CZ and SBF was acrimonious. You know, right there before CZ basically sunk FTX with a single tweet, kicking off the most recent round of events in a rather eventful bear market. Now, here's what I mean. Cameron Winklevoss wrote an open letter to the board of the Digital Currency Group. In that letter, he said Barry Silbert is not suitable to be the CEO. He said that Silbert and one of its subsidiaries, Genesis Global Capital, scammed more than 340,000 users of Gemini's Earn program. He also previously made an accusation on Twitter that Genesis owes Gemini $900 million, and he accused Silbert of evading responsibility through using lawyers and investment bankers. Now, Winklevoss claims that Genesis borrowed over $2.3 billion from Three Arrows Capital. That resulted in a loss of $1.2 billion when the hedge fund failed in June of 2022. He also alleged that Silbert, DCG, and Genesis planned a carefully crafted campaign of lies from July of 2022 to make it look like DCG invested in Genesis by including a 10-year promissory note in its assets. Winklevoss also said that the CEO of Genesis, Michael Morrow, was involved in this deception by providing false and misleading statements on social media about DCG investing in Genesis. He also says that some personnel in DCG tried to hide the fact that Genesis was not properly financed. Winklevoss claims that if the hedge fund FTX hadn't failed, the accounting irregularities of DCG and Silbert might never have been noticed. He also said that Genesis did transactions involving recursive trades with Three Arrows and the Grayscale Bitcoin Trust, using a method that he calls effectively swap transactions. He said these transactions resulted in a loss for Genesis, and the firm failed to report it in their balance sheets. He said this was done to make it appear as if Genesis was financially stable without actually providing the necessary financial support from DCG. He said DCG wanted to reap the benefits without any actual commitment. Winklevoss asked the board of DCG to dismiss Silbert in order to provide a solution for the Earn users. Now, Silbert has denied that DCG borrowed $1.65 billion from Genesis. He said that they never failed to pay interest and all loans to Genesis are current. Winklevoss stated that as long as Silbert is the CEO of DCG, there is no way forward. He believes that Silbert is not fit to lead the company, and he is unwilling and unable to find a fair and reasonable solution for the creditors. Therefore, he requested on behalf of the 340,000 Earn users that the board dismiss Silbert as CEO. Now, for his part, Silbert wrote in a letter to investors that the last year has been challenging for him and the industry. DCG has cut jobs and is closing its crypto asset management department. Silbert also addressed the controversy around Genesis Capital and its customer Gemini. He explained in his letter that DCG borrowed from Genesis Capital, but emphasized that the loans were at market interest rates and on an arm-length basis. He also mentioned that DCG has a $1.1 billion promissory note with Genesis Capital. Additionally, he said that due to the loans and the promissory note, DCG executives have no decision-making power in any restructuring of Genesis Capital. Twitter is developing a new feature called Coins, Coins allows users to reward each other's tweets with awards. Users purchase coins with fiat currency and process payments through Stripe. Users will be able to withdraw the award at a minimum threshold of $50. Now, this is a new monetization strategy for Twitter, which lost much of its staff recently when Elon Musk took over. It's not clear if coins will exist on the blockchain or even if crypto will be used at all. So far, there's no definitive proof that crypto will be involved. That said, if Twitter is planning to implement crypto, it may keep those plans secret until it's ready to release them. And we got a bunch of central bank news tonight. Nepal's Telecommunications Authority has issued a notification asking internet service providers to stop providing access to websites, apps, and online networks related to crypto. It's the latest move by Nepal's authorities to block crypto-related activities. In September of 2021, Nepal's central bank banned all activities related to cryptocurrencies, including trading and mining. Later, in April of 2022, Nepal's Telecommunications Authority asked the public to provide information about anyone they suspect of engaging in illegal activities involving crypto. Now, the most recent warning issued by Nepal's authorities states that internet and email service providers may face legal action if they allow any activity related to cryptocurrencies on their platforms. The authorities have mentioned that illegal transactions involving virtual cryptocurrencies have been on the rise in recent days. Despite the ban on crypto activities in Nepal, the nation has ranked 16th in the 2022 Global Adoption Index by Chainalysis, which is ahead of countries like the United Kingdom and Indonesia. According to a report from the Library of Congress, Nepal is one of 9 countries that have implemented an absolute ban on cryptocurrency activities. So it's Nepal, China, Algeria, Bangladesh, Egypt, Iraq, Morocco, Qatar, and Tunisia. And we have a CBDC alert, this time in Nigeria, but with a twist, because Nigeria might be headed down the right path. Nigeria is ready to accept private stablecoins and is working on creating a legal framework for them. A recent strategy paper from the Central Bank of Nigeria says that a framework is needed as stablecoins are likely to become a successful payment method in the country. This report addresses the need for regulation for initial coin offerings, as there is currently none, which is causing investor losses. The Central Bank of Nigeria sees potential in using ICOs for fundraising, lending, and crowdfunding, and believes that a regulatory framework is needed if this approach is adopted. The report focuses more on the use of CBDC and expects it to be implemented within 3 to 5 years, and sees it as a potential enabler for transformation in the national economy. Nigeria has set up withdrawal limits on cash in December of 2022 in order to promote the use of e-Naira, their central bank digital currency. Adoption of the e-Naira has been low since the launch in 2021, with less than 0.5% of the population reported to use it as of October of last year. That's a year after its launch. This is similar to the CBDC alert from the UK, because a UK official stated that if a digital pound is created by the Bank of England, it would not be used as a means for the government to track citizen spending. It would be designed as a platform model that would not give the government access to individual transaction data. One official stated that the government would not be able to see how individuals use the digital pound, except in cases where it's necessary to protect against money laundering or fraud, which I have to say really concerns me. So it's not impossible for them to see the data. They just have to get permission. And since you know it's possible, you know that data is going to be leaked. So we're getting so used to the idea of customer data leaks that the potential barely even registers anymore. Anyway, banks would be in charge of issuing a digital wallet for individuals to use. They also said that the government is aware of privacy concerns and that it will proceed in a way that addresses them fully. An official stated that the government and the Bank of England will publish a consultation paper on the central bank digital currencies in the near future. This paper will also include an additional consultation on regulation of crypto. Additionally, the official mentioned that a wholesale CBDC for payment settlements is being considered alongside the retail-facing function. A UK official stated that a central bank settlement system through a sovereign digital coin is being considered as a potential use case. However, it was also noted that stablecoins are likely to provide that function before the digital pound is implemented. A bill called the Financial Services and Markets Bill, which covers the regulation of stablecoins in the UK and increases oversight of crypto assets by regulators, is scheduled for the second reading in the House of Lords. The official also said that the government intends to develop a regulatory framework for crypto assets and stablecoins that promotes growth and innovation in 2023, but no new legislation is expected this year. Russia's central bank plans to develop a system for cross-border settlements using a digital version of their national currency. They plan to study 2 models and then begin development in the first quarter of this year. This move is likely a response to current sanctions and international situation. Now, the first model for cross-border settlements would involve the country making separate agreements with other countries to integrate their CBDC systems, with rules for converting and transferring assets between countries. The second model involves a single platform through which Russia interacts with other countries, with shared protocols for facilitating payments between nations. The head of the Financial Innovations Association said that the first cross-border settlement model involving Russia's CBDC would be easier to implement, but not as good for interactions between countries. The second model is more advanced, and he thinks it could be first implemented with China because it is ready politically and technologically. In September, it was reported that Russia plans to use its digital ruble for settlements with China by 2023. Some believe that the success of Russia's digital ruble will be affected not by technology, but by politics. The vice president of the Association of Banks of Russia said that a digital ruble won't change Russia's political situation and that trials for the platform can only be done with countries that are friendly with Russia and technologically ready. Russia's central bank previously said that it plans to launch the digital ruble by 2024, with all banks connected to the platform. The country has been facing financial and trade sanctions since the escalation of the war with Ukraine in 2022. Russia is looking for ways to bypass the sanctions, such as the central bank thinking about using cryptocurrencies but only for foreign trade. In September, the Bank of Russia and the Ministry of Finance agreed on a rule that lets Russians make cross-border payments using crypto. Meanwhile, Coinbase will be laying off 20% of its employees in a second wave of layoffs in the beginning of 2023. This action is being taken by the company in an effort to reduce operating costs by around 25%. The company's CEO, Brian Armstrong, announced the layoffs on January 10th. Armstrong emphasized that the company is well capitalized and that the cryptocurrency market is not going away. However, layoffs are necessary to maintain the appropriate operational efficiency. The government will also be shutting down some projects that have a lower probability of success. Armstrong also stated he believes recent events will ultimately benefit Coinbase, referring to the increased regulatory clarity and opportunities arising from the failure of FTX. Armstrong said that the benefits of the changes the company is making will take time to appear. He said it's necessary to ensure that the company has the right operational efficiency to cope with difficult market conditions and take advantage of any emerging opportunities. Coinbase announced in a blog post that they are filing a Form 8K with the Securities Exchange Commission and that their audited financial statements from 2022 are not yet available. As part of the plan to reduce their costs, they expect to spend between $149 and $163 million. $58 to $68 million are related to employee severance and other termination benefits. The company expects the restructuring plan will be mostly complete by the second quarter of this year. These latest layoffs by Coinbase come several months after it initially reduced its headcount by 18%. This action was done by the company's CEO, citing economic recession as the reason. And finally, South Korea's tax agency is investigating Bitthumb Holdings for possible tax evasion. The company, which is the parent of a cryptocurrency exchange, is being looked at for possible evasion through domestic and international transactions. A representative of the company confirmed the investigation but did not provide any further information. Now, this is the second time that Bitthumb has been investigated for tax evasion in South Korea. Back in 2018, Bitthumb Korea was investigated but not found guilty. More recently, former chairman Lee Young-hoon was acquitted of fraud charges, and another former chairman and his sister were questioned for embezzlement. And that's going to do it for us tonight. I want to thank you, my listeners, because when you stop listening, I will stop talking. We'll see you tomorrow night.